Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with a morning market preparation video for September 17th, 2018. So, hey, as we begin the second half of September, we're looking at a market that, well, just a lot of indecisiveness while still in a trend. So first, let's take a look at the diamonds here really quick. The Dow holding up really quite well, leaving behind a couple indecisive candle patterns. And we're trying to push up toward this resistance high. The good news, I think, is that we continue to hold this this trend. Our trend here continues to hold, and we continue to hold above this key support level. So all is well there, but there is just the confusion or the uncertainty of these indecisive candles. It seems like every day we've been getting these whipsaws. We start looking good through the day and then whip down and whip and whip and whip, and we might whip up and we might whip down. Seems like every day those have been pretty normal course of action, and so we should probably be expecting those to continue this week. So far, there's no reason to panic here by any reason, but there is a little bit of reason to be just a little bit cautious and realize that anything can happen out of those indecisive candles. Let's take a look at the SPY. Oops. The SPY also leaving behind some of those indecisive candles. But as you can see, trend continues to maintain itself, and we continue to look good in this market. So we've broken through this downtrend line. We're looking up here, pushing up here toward this resistance high, trying to break out. And everything is looking good along those lines. The bulls are certainly still in control of the trend. But these little indecisive candles as we approach this top with these whipsaws that continue to happen should certainly give us a little bit of pause and make us extra watchful of the market. Currently, futures are pointing to just a slightly lower open in the SPY, also in the diamonds, just a slightly lower open this morning. And we had U.S. futures, Asian markets close mixed but mostly lower, and European markets are currently lower across the board, but somewhat modestly. And, with all of the trade talk that came around this weekend, all of that, all of those swirling storm clouds, potential storm clouds on tariffs, certainly plaguing the market right now. And little concern out there about what the White House may do. So we have to be prepared with indecisive candles pushing at the market high. We have to be prepared for just about anything. I really feel like, the bulls are in charge. The bulls are certainly holding things up. But remember, we just continuously get these really sharp bear attacks, and those attacks, whipping us lower. So we have to be prepared for the possibility that they could step in here anytime. And with that swirling potential of tariffs, it certainly gives them a tiny little bit of an edge up if they do decide to make that attack. I don't know. It's just one of those confusing markets right now. It's one of those places where you want to be bullish, but you have to be prepared with a little caution in case those attacks do come. So watch that closely. Now, the Qs left us a little bit of concern here on Friday. Reversing a little bit here, but still holding above this key support. And that's really important that we held above that key support in the market. We kind of hang on to this level. That's an important thing to see. So we don't want to see this drop down below. And as you can see this morning, we're getting a gap down here in the NASDAQ that's a little bit stronger than the rest of the market, gapping down to near the low of Friday. So that would be, it's going to be really important to kind of stay focused right here. If this slips below that line right there, we're going to have to wonder whether or not the bears are really taking control. Now you can see, if you look at this chart, we have this uptrend line right here. And this uptrend line is really not very, there's not a whole lot of subjectiveness to that trend line. It's pretty clear where the lows are in that trend. It's also pretty clear that we've tested the underneath side of that, and we're starting to show a little bit of stress. So if that were to push lower, certainly that could kind of pull the rest of the market lower as well. So we'll have to watch that closely. The other thing we'll want to recognize is the possibility that that would be a lower high in the Qs. And we haven't seen a lower high in the Qs for some time that would follow through and make this lower low. So we'll have to watch that. Also keep in mind that the SPY is right at that point where we could, no one wants to think double top, but doggone it, right there's the possibility of that double top. And if we were to swing lower, that could certainly be the case here. So keep that in mind. IWM did a good job on Friday holding that key support. I was a little bit worried that it might slip below. But those Friday traders came in, they came in strong, they held up that IWM support, and that held up throughout the day. As you can see, we're looking at just a tiny gap lower here in IWM this morning. Let's take a look at the VIX. The old VIX pushing back down here, showing really a lack of fear, no fear at all. In the market down here around a 12 handle. Here's our price support. We could certainly hold in here and see that bounce on that lower move this morning, or we could actually see fear push on lower down here to this line. And you can see we've tested that area once before, and all that line is a long-term downtrend line that has occurred in the VIX. Look at that long-term 2-year downtrend line that could also serve as that support point if we move just a little bit below that 12 handle down here into the 11, 10.5 handle of the VIX. So certainly fear is not a factor at the moment, but we could see that begin to creep up off of this support level. So we'll have to kind of keep an eye on that. All right, watch that closely. If we start creeping up, it could be a problem there. T2122, that 4-week new high, new low ratio, as you can see, plotted here as just a line chart. We have a bullish reversal zone and a bearish reversal zone. And those two zones, at least currently, we're pretty far away from either one of those. So here we are continuing to bounce around this middle area, meaning that we have plenty of upside potential and certainly plenty of downside potential in the market. So keep that in mind. We do have the ability to move significantly. So watch that close today. If those bears do happen to start taking over and maybe attack to the downside. Let's take a look at the economic calendar this morning. Economic calendar is actually fairly light. We do have one item on the calendar that could move us around a little bit. That's that Empire State Manufacturing Survey. They're expecting that to remain very, very strong. Back orders are starting to build, and factory demand seems to be very, very strong here. So keep an eye on that manufacturing survey report here at 8:30 this morning. Other than that, we have some, bond and note settlements, and then we have bond auctions and announcements today. So only have to focus on that Empire State Manufacturing. On the earnings front, we got about 15 companies reporting earnings, and the biggest ones to pay attention to would be FDX after the bell today. FDX is reporting, and also Oracle is reporting after the bell today. So we'll want to watch those pretty closely. They certainly are the kind of companies that could move the market around a little bit. So that will obviously they will be mostly affecting Tuesday morning. But kind of watch those two. Those are the most notable of the day. So with that, everyone, hey, I want to just one more time echo just a little bit of caution. You want to be careful not to overtrade a market that seems to be just tentative. It's really easy to rush into the market with your bias and end up over trading just before the market shifts. So be really careful of that. Don't over trade this market. Wait and see if we actually get those follow through clues of a move. And what do I mean by that? Well, when the market opens, certainly that's institutional push that's going on in that move. And we need to see if there's going to be follow through price action. So this morning we're looking at a small gap down at the open. And if we wait 10, 15, 20 minutes after the market open, we'll get some clues whether or not the sellers are actually going to follow through and push that lower. If that doesn't occur, we need to also remember that they could push us back higher if they don't follow through. So we want to watch that closely and just be prepared and wait after that market open for those better clues when we actually see buyers or sellers reacting to the market. So watch that closely at the open and don't be one of those folks that rush in full of emotion at the morning open, because it's very possible you can get burned very easily. We experienced some nasty whipsaws last week, punishing those that rushed into the market. So be just really, really careful about that. With that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen these videos, do me a favor, click that subscribe button on YouTube, follow me button on Facebook, click those thumbs up buttons and drop a comment. I really do appreciate it. And for those of you out there that are looking for a charting package, hey, I just began a series on TC2000 software. Look for that on my YouTube channel. You might find some help in that. Even if you are a TC2000 current user, you may find some help in that on how to gain more efficiency out of it. With that, everyone take care. We'll talk to you very, very soon, bright and early Tuesday morning, and I wish you all the best. Have a good one.